Sterling. With less than 3 months to go until the British referendum on membership of the European Union, the pound is under pressure. What are investors thinking? Are their nerves getting to extreme levels? To help us discuss these issues, we are joined by Sam Lynton-Brown, currency strategist for BNP Paribas. So Sam, what's been happening to the pound?
It's been very weak in the first 3 months of this year, really driven by two factors. The first is that there's been a significant unwind of Bank of England tightening expectations, and the second factor is that uncertainty on the upcoming EU referendum has really picked up a lot. So on the first point, why have we seen this significant unwind of tightening expectations? It's really been driven by two factors. The first is the big global risk-off move that we saw in financial markets in January and the first 2 weeks of February. And the second point is that UK macroeconomic data has been a little bit worse than we were anticipating, in particular the wage growth numbers, which are really key for the Bank of England.
So we've got some fundamental numbers, but we also have this big moment coming up for the pound. And I think you've got a chart here which shows people can buy insurance in the options market about whether this pound may get much stronger or much weaker, and this is sending quite a signal.
Yeah, you're absolutely right. What we've got here is the cable 3-month 25 delta risk reversal, and what this shows us is the spread between the cost of cable puts, which is the right to sell, and cable calls, which is the right to buy. And the key point to take away from this chart is that foreign exchange investors are currently willing to pay significantly more to hedge against a depreciation in the pound than they are to hedge against an appreciation in the pound, to an extent that we have never seen before. So this spread is at more extreme levels than we saw during 2008.
So that tends to suggest quite an extreme level of nerves in the currency market towards the pound. So what sort of conclusions should we draw from this?
Our view at BNP Paribas is that a lot is already priced in.
I think you've got another chart which shows some of this.
Absolutely. So what we're looking at here is BNP Paribas FX positioning analysis, which is a proprietary quant product that we've developed at BNP Paribas, which is our gauge of how foreign exchange investors are currently positioned. And we think this is really important at the moment because what it's showing us is that foreign exchange investors hold the most extreme short position in the pound than we've seen ever since 2008. And therefore, our view at BNP Paribas is that actually risks are skewed towards a sharp rally in the pound if we begin to see the macroeconomic data come in better than expected, or if we begin to see some of the uncertainty around the referendum dissipate.
So what you're saying is the position might have got a bit too extreme in that people are too worried, and so anything which changes that could prompt them all to sort of change their minds quite quickly.
Exactly. If we see macro data come in better, and if we see referendum uncertainty come out of the market a little bit, and that occurs against a backdrop of extreme short positioning, then we could see those short positions get squeezed out of the market and we could see a sharp rally in the currency.
So we could be seeing sort of the peak moment of Brexit fears right now.
That could certainly be the case.
Thanks a lot, Sam.